In this week's AMT Insight, I want to raise a few really crucial points regarding the sensitivity of metal markets to global energy policy challenges. Now, this has been all over the news, but governments globally are racing to respond to a looming global energy crisis. We've seen electricity prices spiralling higher, and to a large extent that's been due to the spike in natural gas prices that we saw in September, which is part of a theme of generally increasing gas prices we've seen throughout 2021. Seen renewables output has been relatively subdued, so low wind power and power generation in Europe, for example, and weak hydropower output we saw issues with in China early this year because they were having a relative drought during their typical wet season. You've also seen the big pandemic-related recovery in demand. So as these economies of the world are coming out of the pandemic, that's increasing demand from industry, from consumers, from everyone really, and that's been putting this strain on energy markets and energy demand. So that's another big factor as well. So concern that these high prices in energy markets and energy shortages, they could persist and intensify into the winter months as demand in the Northern Hemisphere picks up, and that's been particularly in the news in China and in Europe. Now, what's been the impacts on metals? Well, in China, the theme of energy reduction has been more of a general theme this year. Chinese provinces have been subjected to energy reduction targets under China's dual control policy. So that's their long-term goal to reduce energy consumption and also intensity of energy use in their economy. And their concern is that you've got these winter energy shortages. There's another pressure, another reason to be reducing energy use, and that's been an additional pressure on provinces to cut their output. And the industrial complex has really taken the brunt of that. So we've seen curbs on aluminium output and aluminium smelters, for example. That's been a theme over the last 6 or so months, but particularly in September, it seems that these cuts and curbs have intensified and may be extended in the coming months as well. And you can see from the chart how that's impacted aluminium output. You've seen monthly aluminium output generally in decline since March this year, and indeed year-on-year growth also falling off sharply as well in recent months. In Europe, you also have the issue of obviously energy prices surging. We've seen news of the zinc smelter in the Netherlands is one example of one where they've said they're going to be curbing their activities in peak power usage times. And indeed, there's an issue there with electricity costs more generally. You know, in aluminium again, for example, where is the incentive for companies to add additional capacity to restart idle plants with electricity prices at such high levels? You know, existing production is probably okay to a large extent if they've hedged their power use, but in terms of the long-term outlook, it's not looking great for supply. On the flip side of this, I think is a really important point to make generally, is that downstream industrial metal consumers are also being affected by these energy curbs in places like China and threatened to be as well in Europe if these energy issues continue as well. And there's a more general point to be made here about potential impact on metals prices, because this increase in cost that's going to be passed down through the supply chain is a rising inflation risk more generally on economies. You know, it's something that could weigh on economic growth and on economic certainty. So that's something that indirectly could weigh on metals demand and indeed on prices as well. So that's kind of the other counter to this argument about supply restraint. Now, what are the long-term implications really of decarbonisation goals and of energy policy? Well, we've seen that this decarbonisation theme, which has been behind a lot of the pressure to phase out fossil fuels, things like coal, natural gas, particularly in China, but also in Europe, is a theme as part of the Green Deal, for example. I mean, this decarbonisation theme, it does present obviously clear metal demand opportunities because of, you know, it upgrades to the electricity grid, movement into areas like electric vehicles, which are obviously going to use quite a lot of metal, particularly metals like copper and nickel, for example. But the continued pressure on supply from the potential impact on energy availability is also going to be quite positive for prices. However, there is this broader policy challenge really. I think this is really the key point of this whole topic. This policy challenge between rapid decarbonisation that global policymakers are trying to achieve and at the same time maintaining economic and social stability. So trying to phase out these fossil fuels too quickly, if you're having issues with energy prices, consumers, individuals are going to feel that. You're going to potentially have a social backlash and an economic strain, really, from the fact that energy prices may be rising to levels where it's becoming an issue. I think this growing reliance on renewable energy is also something which could lead to greater weather-related power market volatility as well, as we've seen this year in China when they had the hydropower issues and other issues related to wind power, as we've seen volatile weather and climate this year as well. So that's kind of another risk. And metals, really, as I said, the industry in terms of supply is really going to feel the brunt of these issues with supply availability. It doesn't really matter if smelters are hedged, if governments come in and say, you need to cut your output because we need to guarantee supply to consumers and to households, for example. But there is this theme, really, again, that if this rise in electricity prices or long-term issues with energy security are really going to impact economic growth and economic activity, then that could really undermine some of the gains in metals demand, perhaps that we'd see from new opportunities from decarbonisation and from some of these supply constraints we might expect from curbs on power availability and output. So that's the overall view on this topic. Again, really encourage you to follow AMT on LinkedIn for these topical insights that we're putting out regularly. Thank you.